Welcome to the Brain Picker Pro Show, live from Lake Wiley, South Carolina, and all the way up north in Cleveland, Ohio. Fellow mastermind member, fellow investor, friend, entrepreneurial mogul himself, Joe Lieber. What's going on, buddy?
How you doing, buddy? Thanks for having me on.
Man, I'm good. Thanks for being on today. I know, we were just talking before we started recording, man. I've been running around like crazy today. Just before we recorded this, I literally got off a live webinar 2 minutes before I dialed you up.
Oh, my goodness.
I know, right? So, man, I'm really excited to have you on here. I've seen you on the calendar for a while coming up. And I'm really excited that you're on today because you got a lot of cool stuff to share and you've been doing a lot of different business. So, I could sit here and read your bio and all that, but why don't you share with our listeners a little bit about yourself? Who is Joe Lieber?
All right, Larry. Thanks for having me on once again. I'm super excited to be here. I am from Cleveland, Ohio, and I've been investing in real estate since 1998. Larry, I have been involved in almost every aspect of this business, from landlording to wholesaling to rehabbing. I have a full-service real estate brokerage, wholesaling, and now I'm currently doing turnkey property for people all over the world in one of, they're saying, the hottest real estate markets in the country right now. And everybody's wanting to know what LeBron's going to do here in a minute. It's a big question. So here we are, though. It's been a wild, crazy ride, and hopefully today some of your listeners I can give them the keys to the elevator, because over the last 20 plus years I've taken the stairs, and it's been a long way up. So hopefully I can drop some good nuggets today, and people get a lot out of today's episode.
You've been doing this a long time. You started in the late 90s?
Yes, sir. Late 90s, 1998. Really started getting into the business. So it's been a crazy ride.
That's really good, man. That's really good. So tell us a little bit about, let's talk about the real estate side. You've got the investment company. You own a lot of properties.
Sure.
And, a lot of properties, right? And but you also have the brokerage. So tell us a little bit about your real estate investing business.
So here's really what it boils down to for me is, being a real estate investor, I always wanted to find that freedom number. People talk about that all the time. How much money do you need to come in passively so you really don't have to work? You get to do what you want to do all day, every day. So my main objective in my real estate business was to get as quickly as possible to my freedom number. Now, that number is always ever changing, because once we hit our freedom number, usually we want to go above and beyond. I want to get that. I want that new BMW or whatever the case is. Right. But it gets fun and exciting at that point. So I hit my freedom number a long time ago, and I did it through cheap houses here in Cleveland, Ohio. And that's what works really well for me, and it's a great model, and I'm here to educate about that and talk about that today.
That's awesome. So tell us a little bit about the cheap houses in Cleveland. Tell us about your model.
Yeah, so I do two things here. I invest in single-family homes.
Right.
That's where I have found the best space for me. I've owned multifamily. I actually owned a 48-unit building for 10 years. I just sold it in January 17, and that was good for me. I'm glad to sell it.
I hope you 1031'd it.
Well, I lost money on it actually after 10 years of ownership.
Wow.
Yeah, pretty wild. And I bought it in 2009 in one of a very slow real estate market, and still lost money on this deal 10 years later.
Right.
So I quickly learned that multifamily just wasn't for me. Single family home, that niche there, the tenant retention, the tax advantages, the cash flow,
right,
all those things is what I felt was just win-win-win, and that's where I shine. So then the next draw to Cleveland is the houses are cheap. In a lot of the parts of the country, you can buy a house for an earnest money deposit. Literally, these houses can run anywhere from $40,000 to $75,000, $80,000.
Right.
And those are earnest money deposits in a lot of markets. So
right,
it's really interesting to a lot of people. So I do two things here, really. I do single family homes that I put on Section 8. And that's a whole thing we can talk about. And then I also do single family homes that I do on rent to own. And I give these, I call it the average American family, a chance at home ownership. And I put people in these properties with the opportunity to enjoy the homes, to kind of test drive the home a little bit.
Right.
Make sure that they like being there. It works for them. They like the neighborhoods. and then I give them the opportunity to buy these homes at a little later date, and it's advantageous on both ends. So I really have two models in the single family market, and that's the rent to own and the Section 8.
I love that, man. That's really good. The rent to own, you kind of give them a trial period. I call those people homeowners in training. That's what I call them. That's what I call them.
Yeah, great.
So tell us a little bit about those two different models. How do you determine which property you're going to rent out Section 8 versus you're going to rent to own, and then we'll get into a little more structure.
So I identify what the neighborhood's going to call for. If the neighborhood is predominantly Section 8 rentals and there's a lot of that in the neighborhood, I'm going to do that there. Versus, a different type of neighborhood, maybe a B-class type neighborhood where you're going to find a lot of owners. Typically, I'm going to want to do a rent to own there because someone has the interest of wanting to own that home and continue to build clean, nice neighborhoods.
Right. That's awesome. So give us a typical rundown of a typical rent to own deal. What you're buying it for, how you fund it, how much they're paying, how much down, all that good stuff.
Absolutely. So typical rent to own right now on the west side of Cleveland. So let me say this too. Cleveland, Ohio is a very segregated market. It's funny. It's you meet any Clevelander anywhere in the country, and if they say they're from Cleveland, you always ask, you an East Sider or West Sider?
Oh, really?
It really is. It's that crazy. And it just seems like people from the East Side stick on the East Side, and the West Siders stay on the West Side.
Wow.
Everybody will always say, I'm not going over on the East Side. I don't like it over there. And then the West Siders say, it's very funny how that works. So, but I am a West Sider. So I do everything on the West Side of Cleveland. That's where I shine. That's where I know. That's what I love. That's what works. So here's what the homes are going to look like. It's typically a 3-1 colonial or bungalow,
right,
built sometime between 1920 and 1950, and they usually have some CapEx done to them. CapEx are major items like roofs, windows, siding, gutters, furnaces, ACs, hot water tanks. So you usually hit on a lot of that CapEx,
right?
And that would be a good rent to own property. And then what we'll do is, we'll kind of leave a few things that are undone, like we might paint the first floor and not paint the upstairs. So we kind of do that deliberately because what I'm trying to create is the perfect marriage. I need them vested in these homes. So I'll get a little bit of money down and a little bit of sweat equity. And when I put those two things together, it's a perfect marriage.
I love it.
They pay real well and it works great. As far as the numbers, a home like that, I would call that pretty much a turnkey asset. And that's going to run about $75,000.
You're going to be in it for $75,000.
All in it for $75,000 is what I would sell that to my investors for.
Oh, you would sell it. Okay, so you turn those actually. You put your lease option or Section 8 person in it, and then you sell it to a turnkey buyer.
Yes, I would sell it to a turnkey buyer for about $75,000. The rents are around $800 to $850 a month. And the beauty of this is the tenant is responsible for all repairs to the property. So you're not going to get those typical maintenance calls because that's the contract that they enter into with me.
Right.
They are responsible. It's a home ownership and training like we talked about.
Right. Are you doing that is it a lease option or a land contract, or how do you structure it?
I'm doing a lease option.
Okay, good.
5-year lease with an option to buy. Now,
5-year. That's great.
5-year. Yeah, everyone signs a 5-year lease. Now, Larry, we've been around the business a long time, and you and I both know that this is a Class C property, and I wish everybody would buy these homes. But, unfortunately, it's just a small percentage that actually end up exercising their option to buy the home after 5 years. These folks typically, things change. They either have another child, or they need more space, or kids are moving out of the house and they want to downsize, or, it could be anything. A divorce happened, or, anything. So it's a very small percentage of people that actually buy the homes. But nevertheless, as I like to say, I'm leading the people to the opportunity for home ownership. Whether or not they take it or not is up to them.
Right. And you and I both know the vast majority never close.
Exactly.
Yeah, that's just the way it is.
Yeah.
What type of strike price or option price do you give them? If you're turnkeying that for $75,000, what's their price? Probably in the 80s or 90s, right?
Exactly what I do. And sometimes I leave it open-ended because the real estate market is going up here, like really going up. It's crazy.
Right.
And I put appraised value on the contract a lot of the time.
Wow. Okay.
And then that way, at the end of the lease, we get an appraisal done if they're really going to buy it. And then we kind of negotiate with them from there a little bit. I'll leave it a little bit open-ended for the tenant because we've seen tenants come in and finish basements, and we've seen tenants put roofs on and things of that nature. So it's, I try to tell the tenants, I'm not trying to have you do all the work and then me reap the benefits on the back end. But I kind of tell them, you're going to be right about that $90,000 price point unless the market goes through the roof or something crazy.
Right. That makes sense. About on a $80,000 or $90,000 house like that, and if they're paying $800 to $850 a month, what is typically their down payment, their option consideration?
Between $1,500 and $2,500.
Oh wow, okay.
Now that varies because during tax time, you usually can get $3,000, maybe $4,000. But once you get past about June or July, you're back down to $1,500, $2,000 typically.
Now you probably keep that money yourself. You don't pass that along to your turnkey buyer, do you?
I do. I pass it right on to my turnkey
buyers.
Really?
That's great.
Yeah.
That's
great. I let them
great.
enjoy that.
That's great. It helps bump their yield up. So what type of yield is your turnkey buyer getting on these kind of deals?
They're seeing 10%.
Okay. Now, is that including their tax benefits or just 10% cash on cash?
Cash on cash is 10%.
Okay.
No tax benefits. I'm not even including that initial down payment that I give to them, and that's not even included. If you include that and the tax benefits, you're getting upwards of 15,
Yeah, that's good. That's really good. Now, are most of your turnkey buyers, are they financing the deal or are they paying cash for the whole 75?
That's a great question, Larry. So we see a lot of cash, but lately over the last year, I have been personally financing the buyers. And I've been offering a really simple loan that everybody loves, and it's a loan that I actually used myself to build my 150 houses that I own now. I do 50% down and then 50% loan by Uncle Joe, as I like to say, on a 5-year amortization at 10% interest.
5-year am at 10%. And so on the 75, you're financing 37.50, 37.5, and they finance, or they put 37.5 down.
Right.
And then 10%, is it interest only payments?
No, it's a full amortization. So in 5 years, it's paid for completely.
That's awesome, man. I love that. The 50-50 model.
The 50-50 model. You pay for half, the tenant pays for half.
That's right, man. I love that. And the goal should be, and I hope you don't mind me saying this, but the goal should be you're getting most, if not all, your money up front in the down payment in the 50% down.
I wish I was.
Right.
But the market is it's really getting up here so much that no, I'm not getting whole on that 50% down. That would be a good goal. And about 4 years ago, I could do that.
Right.
But anymore, no. What I'm actually doing is taking that paper and I'm selling it on the secondary market so I can get cashed out.
Wow. Okay.
Keeping some, selling some, I should say. About half the time I'll keep it, half the time I sell it.
So now you're getting me excited. I want to buy some of that paper. Tell me, because that's good. I mean, you're at 50% loan to value. You've rehabbed the house. You got a lease option tenant in there. You got an investor that is buying the deal. So you've got the investor on the hook. You got the homeowner in training on the hook, right? They put 50% down. They're not getting much cash flow right now. All the money is going to pay you, Uncle Joe, right?
Yes.
Yeah. So you're getting the same amount as just about as the rent coming in.
As owning the house.
Yeah, as owning the house, right? So tell us about selling that note. What do you get for those notes? What kind of yields do you sell them at?
Well, I have been getting them. The first couple I sold, I was getting 100% LTV.
Wow.
Then it dropped to 97, and right now my note buyer is buying them at 90.
At 90?
At 90. So I won't really go much more lower than that with this particular note buyer. If they take me lower than 90, I'm just going to start selling to, I call them my rich friends. I got friends up here that are doctors and businessmen, and I'll just say, hey, I've got a piece of paper I can say at a 10% yield by a high net worth investor, because most of these investors are high net worth people, right?
Right.
The default ratio is almost zero after putting 50% down and being that they're usually, high net worth people, that I can sell those notes for damn near 100% of the face value of them. So
Wow. Okay, so if you loan 37.5, 10%, 5 years, that's a $796 payment.
is it? Yep. I don't even know, Larry. I have it.
Yeah,
Let me look.
yeah,
Okay, that's what it is. Okay.
Yeah.
5-year term, 10%. Yeah, you're right. 796. Yeah.
Yeah. So, and then you discount that down to what you're probably selling it at, what, 35,000 or something, or 30.
Yeah,
you discount it a little bit, not much.
Yeah, discount a little bit, 95%, 0.95. Yeah, something like that. Okay. Yeah.
Yeah. So if you discount it down, the yield is going to be that yield bumps up to 1302, right?
Yep. Just like that.
Man, that's sweet. 50% loan to value, 13% yield. Man, I want some of those.
I bet everybody does, man. Everybody wants those.
That's good.
I try to keep as many as I can, man, but I can't keep them all.
I hear you. So tell us a little bit about finding turnkey buyers and then finding note buyers. Are they all in the same pool? Do you have some turnkey buyers that they're probably two different people, I would assume.
Yeah, they really are two different people.
Yeah.
People want to buy real estate. People that want to buy real estate want to buy real estate, and that's their goal.
Right.
Because there's a lot of benefits to actually owning the property too. As a note buyer, person owns paper, you don't get the tax benefits that you would with owning real estate, which is a big thing.
Right.
So it's really two different people. But as far as the turnkey buyers are concerned, they come from all over the world. I mean, not just California and Arizona, not just those major markets.
Uh-huh.
I have clients in London, Australia, Rio de Janeiro, Brazil, Vancouver, Tokyo. I just all over the world. It's crazy that people that are coming into Cleveland, Ohio.
That's sweet. So, that is sweet. That is sweet. So I'm assuming that you manage the properties for them. There's not a whole lot of management. It's really kind of hands off, but I'm assuming you manage it for them.
It is. I don't manage, actually. I've got 150 of my own ass aches to deal with every day. I mean, look, you're not going to sugarcoat it. It's work. I mean, it's not just, I'm dancing over here, Larry, and counting money. I mean, yes, you're going to count money, but you're going to work a little bit too.
Right.
So what I do with my folks is I have a strategic relationship with a RE/MAX real estate franchise here. And this RE/MAX franchise is the best. These guys have it dialed in. I've sent all my clients to RE/MAX. Believe it or not, I have not had one complaint yet from one of my clients that I've sent to RE/MAX for property management.
Wow.
I know. It's crazy. It's been a good relationship.
So where are you finding all these investors from all over the country and around the world and London and all these places?
Yeah, man. A lot of them come from podcasting. I do podcasts with other members and other CG members who have big podcasts, and I get a lot calls from there. A lot of referral business. I get a lot of that. And I've also joined international real estate associations as an advisor, and
that's sweet.
People have come through that as well.
That's great, man. If you just get just like this podcast you're doing right now. Yes. Somebody may watch it and reach out to you and say, "Hey, I want to buy one of those notes Larry's excited about."
Yeah, exactly.
That's awesome, man. I love it. So tell us how, and this is something that I haven't really worked with in the past. I've done about every kind of real estate there is, just about. But one thing I haven't really worked with a lot is foreign investors. How do you set up and structure someone from the UK buying property in the States from you?
So what I do is I have them get a state of Ohio limited liability company, an LLC here, and a U.S. bank account.
Okay.
It's the easiest way to make things work. Right. And I hook them up with an attorney here as well to advise them on things they may need. And really, it's a pretty smooth, simple transaction because they cannot procure traditional financing here in the U.S., so it's either all cash or loan a bank of Uncle Joe here. So it's really pretty smooth, and I have a great relationship with everybody to this day, and I'm always here to help them through things and things like that.
That's awesome, man. That's really good. That is really good. So your rent to own buyers, they put about $1,500 to $2,500 down. You do a 5-year option, right?
Correct.
Good. and then you send them over to a Remax property manager local there that you got a good relationship with.
That's it.
Man, that's sweet. I
It's
love
that
that.
easy.
I love that. Well, listen, you say it's easy, but if it was easy, everybody'd be doing it, right?
Everybody do it. Exactly.
It's not easy, but it sounds like you have simplified it.
It's like losing weight, Larry. All you got to do is work out and eat good.
I know, right?
Yeah,
That's
right?
all you got to do, right?
That's all you got to do.
Yeah, that's what I say. You know, real estate's not easy. Neither is life. If life were easy, we'd all be skinny, happy, and rich.
You got it.
That's for sure. That's for sure. So man, let me ask you a question. What about, do you do the same thing for finding your note buyers as you do for finding your turnkey buyers, doing podcasts like this and joining groups and stuff like that?
You know, I haven't had to look that hard for note buyers. You know, I've only originated probably 50 notes in the last 2 years, so it hasn't been anything too crazy. A lot of cash people,
right?
But the note buyers have just come organically, really. Other Collective Genius members have approached me with buying some of this paper,
right?
And just my local network of rich friends, as I call them, they're always interested in buying that kind of paper. So I haven't really had enough. I have more buyers for notes than I have actual notes to sell.
Right, right. Now, what about on your side, the funding of your deals? Like when you take down this property that you're going to ultimately sell for 75, are you using private money or are you using Joe's bank?
At this point, I've been using Joe's bank. I have raised a little bit of money from my local network of friends, but it's been very simple. It's always been on a handshake, and it's the same terms. It's 8% interest only.
Right, there you go.
And that's just a great deal, you know.
It is a great deal.
I'm happy with that, and we've always I never had to worry about, you know, getting mortgages together and filing and recording all this stuff, because, you know, I have I'm very credible, you know,
right.
and the people here especially know that, people in my network, so it's just super easy to get money
That's
for
really
me.
good.
But I haven't raised that much, Larry. It's only been, you know, maybe $500,000 or so.
That's really good. You mentioned something earlier that I want to touch on that, I mean, you know, you never know who's going to watch a podcast. You know, there's a lot of newbies out there that have never done a deal, and there's also experienced investors. I get on podcasts and watch them. I was watching one earlier today. Right?
Sure.
So I'm a firm believer in don't just be an educator, be a student as well. So I'm a student as well. And you mentioned something earlier about your 48 unit that you lost money on it. I've told people for years, if you do enough real estate, you will lose money. I think the most amount of money I've ever lost on a deal, I bought a Shoney's restaurant one time, and I had it for about 2 years, and I can't remember how much I paid for it. It was like $2 or $3 million or something, but Shoney's was my tenant, right? And just before I had it under contract to sell, I was going to make about $150,000 on it, which wasn't a lot, but it was still okay. The week before we got ready to close, I got a letter from a professional corporate lease negotiator, right? Telling me that Shoney's is going to have to renegotiate their lease and lower their payments because they're in financial distress. So my buyer ended up following through, but he cut my price about $225,000, which not only lost my $150,000 gain, but cost me another $75,000, right?
There you go.
So I tell you this story to tell you, or to ask you, tell us about some of Joe's losses, because I know you mentioned that 48 unit, but we've all done enough deals to where, you know, we're going to have some losses. And I think that's important for people to understand as well, don't you?
Absolutely. I completely agree. For me, you know, at that point, I bought that building in 2009. I was already in the business for over 10 years, and
Right.
I wanted to go, I was told, to the next level. And in order to do that, everyone tells me you need to go multifamily, go big, go big.
Right.
So what I actually did was I bought a 7-unit building over on the east side of Cleveland.
Right.
And it didn't work. To make a long story short, it didn't work. You know, I could go through those numbers with you if you really want to, but it didn't work. So I went back to my peer group and said, why is it not working? And they said to me, well, you didn't buy big enough. 7 units is not big enough. I go, okay. And I go and buy 48 units right across the street from the 7-suiter. Exact same thing. It didn't work. I was losing money. I mean, just quick numbers, you know, I was into that building for about $21,000 a unit.
Right.
The rent was $450 a door, but I was paying water. I was paying for heat. I was paying for common area lighting and maintenance and all that. And it just, when you started breaking that down, that $450 a month per door disappears quick.
It does, doesn't it?
It's amazing. If you start budgeting for CapEx that you're going to have for a roof and a parking lot and boilers, no, there's just no money in it, really, you know?
Yeah.
And debt service, oh my goodness. So after I fought with that building for over 10 years trying to make that thing run. And it did. I didn't lose monthly or anything. It just broke even, you know, away we go. And then finally, you know, I just figured I've got to get out of this, and it's not going to work for me. And that was it. And I sold it.
Sometimes you get to the point to where your time is more valuable. I mean, you were break even on the cash flow, and even if you got to take a small loss, you're better off just to move on so you don't have to deal with it anymore.
Well, you're right. And I actually, from the sale to the sale price, I lost $50,000.
Right.
So it wasn't a lot. It was a hell of an education. You know, I went from a high school education in multifamily to a PhD in multifamily. and that was it. But, you know, it wasn't for me. It didn't work. I've never lost on a single family home.
Right.
If something didn't work out and the rehab was more than I thought, it's just time. Just give it a little more time, you'll get your money back.
Right.
It didn't happen with this multifamily. The more time, the more money I put into that building.
Yeah.
So
you know, there's one thing I've always said with multifamily: you only have one kind of buyer. That's an investor.
Exactly.
Right? With a single family, you know, it could be a fix and flip investor, a landlord, a rent to own tenant, or, you know, an owner occupied tenant or person is going to pay cash, right?
And then, yep, you're right. And here's a great line for that building, because I had a little bit of a tough time selling that building, and the feedback was 48 units is too big for the small guys and too small for the big guys.
Wow.
So 48 units is kind of a weird spot to be in.
Yeah. That makes sense.
I get it.
That makes sense. Talk a little bit about, you mentioned Section 8 earlier. Some people may or may not understand Section 8. You know, explain that a little bit if you don't mind. So
Section 8 is a government-funded subsidy for people who are low income, who, you know, maybe single moms or people that need to get on their feet. So there's this program, they call it Section 8. It's very hard to get on this program, at least in my city here.
They have a waiting list.
Oh, huge waiting list. They do, I want to say, I'm going to try to give you some numbers. Don't hold me to these numbers, but there's approximately 10,000 new vouchers a year that are given, and there's 30 to 40,000 applicants a year for the program. So when people they go into a lottery, and when they actually pull these golden tickets, and it really is because you're getting your rent paid, you know, they're usually a very grateful group of people. My Section 8 tenants are some of the most grateful, respectful tenants I have in my portfolio.
Wow.
It really is. It's a wonderful program. Section 8 typically tends to pay a little bit more, about 20% more than market rent we've seen here.
Right.
Because there's a huge need for it, and they're trying to get independent landlords on board. So here it's called CMHA, and a lot of CMHA, they have their own properties, public housing they own.
Right.
But they also have the Housing Choice Voucher Program, and that's what it is. The Housing Choice Voucher gives the tenant the opportunity to pick any house they want to if a landlord will offer Section 8 to them. So not a lot of landlords are really do it here. And when I put a house up for Section 8 rental online for, you know, listed, oh my gosh, Larry, I can get 40 phone calls a day every day.
Wow.
It's that insane. It's a dogfight for these things here.
That's crazy, isn't it?
It's crazy. It's crazy. And those example I gave of a $75,000 home getting $800 to $850 in rent, that's on a private pay. Section 8 would pay $1,050 to $1,100 for that house.
Wow. That's really good.
It's really good. So there's two ways to do something like that, you know.
I remember a time in Charlotte when Section 8, when there was a lot of people with vouchers, right? And I remember a time when people would call up and you would start telling them about the house, and they were being selective, right? They were like, do you have a pool? Do you have a sunroom? I need a double garage, right?
Oh my goodness. Unbelievable.
That's crazy, right?
It is. That is crazy.
Good. Now, Section 8 where you are, Do they pay the entire rent, or is it based on their income and maybe the tenant has to pay a small portion?
Yeah, it's really based on the tenant. Some are fully subsidized, and then
Right.
some have to pay a portion
Right.
of the rent each month. And it's just case by case, whether the tenant works or doesn't work. Section 8 is really a rehabilitation program. It's a program to take people in, get them back on their feet, get them working, and get them off on their own. And then sometimes they have to pay a portion.
Yeah. Yeah. That's good. So, Joe, if anybody wants to reach out to you, maybe they're interested in buying one of these turnkey properties through the Bank of Joe.
Yes.
Or maybe
That'd be
buying
awesome.
some of these notes that are double digit high yield notes, or
Yes.
whatever. How would somebody reach out to you?
So they can drop me an email. It's same email I had for years. It's rebroker, the number's 216 at gmail.com, or just call my office. I don't hide behind any admins or anything. You can reach me right here at area code 440-387-4800, and I'm at extension 2.
There you go. That's good. And you have a realty company too, so you have people managing that. You got people dealing with the real estate. You kind of hang out every day. You don't have a whole lot going on that you have to do you?
Larry, you're my last thing of the day right now. I'm going back home. The kids are on summer vacation. I'm going to go do something fun with them.
That's
and that
awesome.
is it.
That's
So,
really good.
yeah.
How old are your kids?
5 and 7. I have
5
little
and
ones.
7. Wow.
Yeah,
You got young ones. I've got a 21-year-old daughter. She has 2 kids. One is 2
boy.
and one is a few months old. And then I have a 13-year-old son.
Oh my goodness. Yeah, you're on the other side of the fence here. I'm still trying to get my 5-year-old to not go in her pants. It makes me crazy.
I hear you. That's funny. Well, man, I really appreciate you being on today. This has been awesome.
Oh, thanks, Larry. I really appreciate you having me on.
Let me know if there's anything at all I can do for you, man. I appreciate you. And you keep doing what you're doing, helping those people become homeowners and helping investors create wealth.
Thank you, sir. I'll see you soon.
Awesome, man. Thanks a lot. I'll see you at the next CG.
You got it, buddy, for
All right,
sure.
buddy. Take care.